Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. US equity markets trading a little bit higher early part of the week here as we await the Fed announcement. Some people are viewing that as an indication that the Fed won't be looking to hike rates at this meeting. But as already stated, they do have a couple of other meetings before the end of the year, and that might just sort of smooth the way for a rate hike towards the end of the year. Certainly there's been a lot of debate with the recent market volatility, sort of moves, and especially the devaluation in China. A rate hike on top of that may just be too much for the market, and could just cause a major correction. Then on the flip side, you've got the Fed have been sort of really setting up the market all year for a rate increase as the data is really getting stronger, really pretty much each month in the US. Certainly the latest unemployment data was again pretty strong. The economy is growing at a pretty good rate, and really they do need to get away from this zero rate policy, just to sort of edge back towards sort of normality and from these very low rates. Here in New Zealand, we've got latest ANZ bond out there, 5 years. Looks like it's going to be around sort of 4%, probably just under. If you're interested in that, call us on 0800 867 323. That's pretty indicative of the times now. For a 5-year bond being issued there below sort of 4%, that's really pretty remarkable. The latest dairy auction gave a little bit more hope out there as prices increased again by around sort of 15-16%. That's the third auction now on the trot where prices have increased, and maybe Fonterra is just starting to flex a little bit of its muscle in the marketplace, sort of potentially controlling supply and just trying to get those prices back up. And say that could then pose some interesting questions for the Reserve Bank. As some commentators out there are still pointing towards sort of further rate cuts this year. But if you've got a little bit of increase there on the dairy prices for the last 3 auctions, potentially a little bit more money being pumped into the economy, housing market's still going pretty strongly. It's just going to be interesting to see how that sort of all sort of transpires into rates. Certainly I think of the next Reserve Bank meeting, rates were left unchanged as they just wait to see the impact of the recent 2 cuts. But also as well, if you do continue to see upward movement there on the dairy auctions, that'll just be interesting to see how that all sort of comes into the mix. Well, there are options out there for income plays, dividend shares, property trusts, etc. You're not really reliant solely on these bonds. And certainly a 5-year bond at sort of just below 4% fixed for the next 5 years. Potentially, if interest rates do start to increase in the next sort of couple of years, may not be such a sort of great investment in a couple of years' time. Certainly at the moment, it's pretty good. And from the issues perspective, it really does appear some pretty cheap money out there. So if you're interested in looking at those income options, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting